new people out there, what then, having done back testing and you start to get confident, how often do you now find a signal or tend to trade? Do you trade loads of times a day, or is it you're literally waiting for an opportunity?
So back then, like 2018, 2019, you're looking at 50 odd entries a day.
Yeah.
Just screen on the phone.
You will not defeat me.
Yeah. Now, once or twice a week at most.
Okay.
Quite often, none in a week. Yeah.
Sorry to interrupt. That's quite interesting, because you said you'd look at the 1 hour time frame, and yet you're being very specific on entries. People would think that's an in the middle time frame,
yeah,
and you'd expect you to be doing 3 or 4 a day and blah blah. So that's proper discipline, isn't it?
It's once you've actually got a rule set, you find very little scenarios you can trade, but that's not necessarily a bad thing. I think
this wonderful thing, and
yeah,
get this out there to people.
The less scenarios you find, I find quite often, if you've got a decent system that's back tested, obviously, the less scenarios you find, the more quality you're going to find generally, I think.
Yeah.
So you'll find maybe, say you take one trade a month and it's a good 5R and you've risked, on a bigger account, $2,000, 10 grand in a month. I think a lot of people would be quite happy with that.
Exactly. And
one trade.
How little stress if you're doing it that way.
And it might run for 4 or 5 hours, whatever. That's $1,000, 10 grand in 5 hours. Who's going to complain about that?
I know. And like I say, you back that, you annualise that, as I always used to say.
Exactly. Yeah. It's
So within that, we haven't really touched on it. You said you're an engineering background. You're still working as an engineer?
Yes.
Okay. So how do you split your time? And
so I generally get up before work and do, because I trade mainly London session. New York, I've learned through the back testing is no good for me.
What, the whole session, or just the fact that it has weird openings and ends?
At the moment, it's
everyone goes for lunch.
Yeah,
I don't think anyone's watched Wall Street. Lunches for wimps.
That's it. Especially at the moment where you've got like the daylight saving changeover. You like, NFP's at 1:30, and you look at your phone at 1 o'clock, and it's what the hell? But I usually hit the crossover and then just be done with it, because I find if I'm getting to 2-3 o'clock here in the UK, it generally, your liquidity's drying up, isn't it? Your volume's drying up. It's just going to trickle in one direction generally, or whipsaw its way along, whatever. But I find in London session, I don't generally trade the open of that. I wait until mid-morning.
So it's sort of 10 o'clock.
Yeah, and then you can really sort of find a scenario where you can just set and forget. That's, there's no point in being glued to your phone. What's going to happen is going to happen.
Yeah. That's something to get over, isn't it? If you've got a system, you've got a stop loss, let it play out. Otherwise you're kicking every ball, and it's a nightmare, isn't it?
If you've set a stop loss, you're expecting to lose 1% of your capital. You've come to terms with it. If you lose 1%, I've lost what I said I'm prepared to loss.
Do you tinker around with anything? Do you move stop losses, or I end up being a bit like the Claudio Ranieri of the Tinkerman.
I don't generally move my stop loss, because I feel like, because quite a lot of trades sometimes you get a whipsaw effect where you'll be up a bit, down a bit, up a bit, and then you might close yourself out and miss out on 4% or something like that. But I find the risk of losing 1% by not moving your stop is nothing compared to the risk of losing 4%.
That's messed up your back testing, isn't it?
There's plenty of people who move their stops, and that's obviously built into their system. And I know a lot of people that would rather just be closed out at break even and go again the next day. I'd rather just take the loss.
So that's another thing that comes up, because if you're in drawdown and stuff, you're absolutely obsessed with break even, the break evenitis. You end up losing the upside of the trades that you know are going to work.
Yeah.
So leave it alone.
I think it can work quite well for if you've taken half the position off the table and you're just going to let the other half run overnight.
So you've got a freebie.
Yeah. So you've already banked some. And you go, I'm going to leave this overnight. There's news overnight. I'm going to put my stop loss above the break-even point, at which point, it's a win-win scenario. And if it runs all the way, then great.
Brilliant. So I've got you jumping backwards and forwards here. So we've now... No, this is why I want you to be. So you've come through that. You've started to do your back testing. You're now getting a feel for it. Have you used anyone... Has anyone given you any help? Or like Alpha Capital gives you great support.
Yeah.
And we're doing more on the psychology side. How did you physically get over that? How did you...
So moving on from the crap psychology of 2019
exactly.
into, I think 2020 was quite an interesting year for trading.
Yeah.
I did really good and really terrible simultaneously that year.
We suddenly got fast forwarded a number of cycles into one. So there's stuff happening now that.
And you can also factor in stuff like that. Now, if you've just traded like, I don't know, 2017 to 19, that was, I think, quite a quiet time in the market. You just generally got trending
up.
And it was, easy enough to make money in a trending market. But when you've got erratic, what was it? The Dow dropped 15,000 points or something.
I think it had 40% pullback at some point.
And you get fantastic entries on that